Hi everyone, let's cover my preferred bullish and bearish scenarios per time frame, starting on the macro with the bearish scenario where I'm looking for a 1, 2, 3, 4, 5 wave impulse, followed then by a 3-wave W, X and eventually a wave Y to the downside with minimum targets of 13k, most likely backtesting this area over here that we haven't seen since the bull run in 2020. What I don't really like about this scenario is the fact that this wave 4 is very short. Usually a wave 4 is longer in time compared to a wave 2. However, in this scenario, it's very clear that this wave 4 is shorter in time compared to this wave 2, which is very rare. If we now look at the correction, we have a 3-wave in W, X, Y, and the minimum target for wave X is usually the 0.382, sitting at 29.6k, also inside the support resistance area that we had over the past couple of years, and there's also a weekly order block right there. So the potential trading setup for this scenario is at laddering the shorts in this area, stop loss safely above, and then trading it to the downside for wave Y. However, my preferred scenario on the macro time frame at the moment, it just looks a bit better, is the bullish scenario where we have a 1, 2, 3 over here, 4, 5. In this scenario, wave 4 is a WXYXZ, which I will show in a second, and wave 4 bounced on the 0.5 fib taken from the low of 2 to the high of 3, also bouncing exactly on the 0.6 fib time taken from also the low of 2 to the high of 3, and we also had a volume peak at the lows right here, which can also signal a reversal area, just like it did with the lows of wave 2 over here, after which we got a very nice wave 3 to the upside. It can also signal the end of wave 4 before then I move to the upside. There were two potential trading setups for this scenario. The first one was the expectation that this is a wave 4, laddering the longs in this position, stop loss safely below the 0.5, as the 0.5 is the maximum target for a wave 4, and then trading it to the upside. However, the bit safer option is to wait for a retracement like we had over here, or another retracement, and then laddering the longs inside of those retracements, stop loss below wave 4, and then trading it to the upside, where the most common target for this wave 5 is the white box between 98k and 174k, with the more rare target being between the all-time high and 98k. If we then go to the daily time frame, the high time frame scenarios, I like to start with the bearish scenario as well, where we have this WXY, right? So a WXY, but this is the wave X in more detail, basically. So we have an expanding flat in the wave X, which is a 3-wave A, 3-wave B, and then a 5-wave move up in the wave C. The most common target for wave C is the white box that you see on the chart over here, between basically the two 1.618s right here, with the high being at about 34k. And what is important as well is that these fibs over here, the 1.236 and the 1.618, pulled from the high of 3 to the low of wave 4. These signal the most common target area for a wave 5 over here, before you can then expect a retracement in this particular scenario. Also over here, the 0.382 is the 0.382 for wave X, usually the minimum target for wave X, which is at 29.6k, which is also the same level as this 1.618. So 29.6k is an interesting level. The invalidation for this particular trading setup is to, first of all, ladder these shorts to the downside, or actually inside this target area, stop loss above, trading it then to the downside. The reason that the stop loss is over here at about 34k is that wave 3 over here in this impulsive structure is already extended, so you do not expect wave 5 to be extended as well. That is extremely rare. So if price would go to the upside for then maybe somehow a wave 5 all the way up here, then in my opinion it is invalidated. We have been ranging here for a while, as you can see, so if this is 3, this is 4, wave 5 might already be in, but I'll show you more about that in the lower time frame scenarios. Then we go to the bullish scenario on the high time frame, where this move to the downside in this wave 4 is then a 3-wave W, X, Y, X, and then eventually a wave Z to the downside, bouncing on the 0.618 as well as on the macro the 0.5 over here. Now in this particular scenario, the move to the upside that we have is a wave 1. So then a 1, 2, 3, 4, 5. That is my preferred scenario. I gotta say the alternative is that this is the first wave over here with a wave 1, wave 2 looking for more upside. But in this particular scenario, we are looking for wave 5 to end, which then is part of the yellow wave 1 over here. And then we would expect a move to the downside. So we would hit this support resistance area and then eventually go for a wave 2, with the most common targets for a wave 2 being between the 0.5 and the 0.786, which is basically between 21.1k and 17.7k, with by far the most common target being the golden pocket over here. Nice confluence with these lows for then maybe a liquidity grab and moving to the upside. For the potential long, that also means that you can ladder potential longs in this area. Of course, educational, no financial advice, stop loss below wave Z, trading it to the upside. The question is, however, are we going to get this low? Or is price just going to push to the downside and maybe like a 1, 2, and then 3, 4, 5 further to the upside? Because once a bull run starts going, you don't get retracements very often. And this was quite a nice retracement, but I'll explain why this is not a preferred wave 2. And then you can go to the upside. We could never have a retracement to the downside here, but we have to wait and see, right? But this is definitely a scenario that's on the card at the moment. Then we have on the more, let's say, 4-hour local time frame, a little bit of a deep dive into this final wave 5. So in this final wave 5, and at the moment this is still my preferred scenario till invalidated, in this wave 5 we have an expanded impulsive structure, meaning this wave 1 is extended. So we have an extended wave 1, 1, 2, 3, 4, 5 in the 1, which then means that the targets for wave 2, 3, 4 and 5 will change, because now wave 3 is not the extended one, it's wave 1. So wave 2 most common targets, if wave 1 is extended, is between the 236 and the 382. Wave 3 does not have a target, and wave 4 most common targets are between the 236 and the 382 as well. The most common target for a wave 5 is in between the 0.618 and the 786, which is basically between 28.9k and 30.5k. So therefore the potential trading setup is to ladder shorts in this area, stop loss safely above, moving to the downside. However, this wick over here already entered this target box. So this could be the end of a wave 5, with the structure that we have over here being the first part of a corrective structure. So you have a 3-wave structure over here, maybe an A. So we have an A, you could get a B, and then eventually a C for more downside. That is possible, but of course, wave 5 might not yet be in, and we still have upside to go. So a more safer scenario is that if you laddered, or potentially with this potential trading setup, because no financial advice, you know how it goes on YouTube, if entries were short over here, then for me the safer option would be to probably put my stop loss break even, and if the stop loss is going to be hit, or I took a little bit of profit and the stop loss is going to be hit, I want to wait and see what price is going to do higher up in this area, and then I can always re-enter in this area as well. If we then go to the very bullish scenario, we have the first wave over here from the lows of 15k basically, over here 15.5k. This is a wave 1, this is a wave 2, and we are now in a very explosive wave 3 to the upside. So a yellow 3 all the way to the upside for much, much higher targets. In this particular scenario, if we zoom in, some things are a little bit odd. The first one is that this wave 2 is very short compared to how long it took to develop wave 1. As you can see, wave 2 took about 23% of the time it took to develop wave 1. And usually, wave 2 is a minimum of 38% of the time it took to develop wave 1. So that is pretty rare. Then if we look at this impulsive structure for eventually more upside, we're looking at a 1, 2, 1, 2, and then another 1, 2 over here before we really need to get an explosive move to the upside, because we really need to get the volume in. As you can see, volume has been going down while price has been going up. That's not very bullish. We really need to see volume spikes in order to make this scenario valid. But also, not like 2 other rare occasions, is that this wave 2, the green wave 2, retraced to about a 0.382, which is a rare target for a wave 2. And this wave 2 in blue also retraced to a rare target for wave 2. So you have a rare target, and then this yellow wave 2 being quite short is also quite rare. Of course, if it is a very bullish environment, then retracements can be very shallow in order for people to miss out and then FOMO in higher. But yeah, it's not necessarily what you like to see in wave 2s. Usually it's between the 0.5 and the 0.786 Fibonacci, and this is extremely rare to have a 1, 2, 1, 2, both hitting the 382 for continuation. However, if price goes to the upside in then a wave 3 in blue, so a 1, 2, then we expect a wave 3 in blue, the minimum target is at 34.2k. Double checking if it's on log over here. No, it's not, so the targets are therefore higher. The minimum target for the blue wave 3 is at 35.5k. However, it is very likely that if this is incredibly bullish, wave 3 is going to be extended to much higher levels. If we then go to the lower time frame, I have two preferred scenarios, one bullish then one bearish, of course, with the bullish one being the more preferred one out of the two, where on the lower time frame, in the bearish scenario, wave 5 is already in. And then this is a wave 1, looking forward to, and eventually a wave 3 to the downside in an impulsive structure. Now this wave 1, however, is not very clean, because if this is a leading diagonal, wave 3 is longer than wave 1, which is not allowed in a leading diverging diagonal. So then it has to be an expanding diagonal, which is incredibly rare. And this wave 2 is also very, very long. As you can see at the bottom of the chart, it already passed the 2.618 fib time, or this has to be the high of wave 2 and then some sort of a WXY scenario, but the invalidation would be taking this high over here, which, I mean, we're getting pretty close, 28.5k, or wave 2 is not yet in, and we expect a higher wave 2 still to come for then a movement to the downside, but then wave 2 is taking incredibly long, so this is definitely an alternative scenario and not a preferred scenario on the lower time frames. Another alternative is, as mentioned on the higher time frames, that this move over here is the first part. So you have a wave A, B, C, but that is something for another video. Then the bullish scenario is the one that is preferred, as mentioned in my previous videos as well. I was looking for a bounce inside this target box for a wave Y. As you can see, price wicked inside this area. We actually have, by the way, to explain this scenario, wave 5 might not yet be in, or it is already in. That doesn't actually matter for this particular scenario, because we're looking for a W over here, an X, and then a very long Y. You can count this differently, but at least WXY, the target is always going to be around this area. Also in confluence with the target box that I had over here, which is between 27,162 and 26,936. And if we look at this particular scenario, the most common target for a wave Y is in between the 1 and the 1.236. Very, very nicely respected, wicking inside this target box. And then the potential entries in this scenario is laddering the entries inside this target box. Stop loss below these lows, trading it to the upside. The stop loss below this lows is important, as that is first of all the invalidation, but secondly, if price is gonna go below these lows, I definitely expect a deeper drop to at least 24.85k levels, which is the next target box that I have on my chart with support. So yeah, this wave Y area over here is very important for a bounce. Is wave Y already finished and going to the upside? Well, at the moment it looks good, right? So if one entered at this wick, it's looking good at the moment. However, not to forget what I don't necessarily like. I don't have any problems with price moving to the upside, by the way. But what I don't really like is that we missed out on hitting the target box. So inside this target box over here, we have a daily naked point of control, we have the range point of control over here, and also a daily level. So there's a little bit of confluence down here, and as you can see, the wick did not reach this target box. It got close, but it didn't reach it. So we could always still get a move to the downside, hit this target box, maybe wick below, but eventually move to the upside. As long as price is not gonna take these lows, we're good. So this over here, this target box is still very important as a target for me. So I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at the next one. Bye bye.